list of things you can know about a company before you buy shares isn't quite endless, but it can run really long. You could visit its headquarters or its factories or offices. You could study every product review or service review that's ever come out on the company. You could visit 15 of its stores to get a sense of the foot traffic and what people are interested in. You could read up on its history and the industry history for days. But at a certain point, it gets to be a little bit too much. While we always want to keep an open mind and we want to maintain an active, lifelong learning mindset towards these stocks, paralysis by analysis can also be an expensive problem in investing. I've got a few more items, though, that I do think can be helpful and don't take too long to process when you're thinking about buying a company. These 3 items will fill out the picture and might give you an interesting extra angle for understanding what you're getting into when you're buying shares of a given company. A good management team can be the difference between a mediocre investment and a winning one. At the same time, it's really hard to know from the outside whether a management team is good or not. There are certain tells we can look at to at least see whether a management team is on our side and see whether they do what they say they're going to do. 2 very valuable traits. We can start by just getting the bio of the management team. And when I say management team, I mean the CEO, and then for larger companies, any other C-level executives. Does their background make sense? Is it in this field? Are they somebody who rose up through the ranks of the company? Were they the founder? Were they a hired target from the outside? Do they have past experience as a CEO? And if so, how was their track record? How was the business track record in terms of growing revenue and earnings? And how was the stock track record? How did the stock do in their management tenure? You can also look out for interviews or podcast conversations that the CEO or other management team members have given, though this can be a double-edged sword. On the one hand, it's a great way to get a feel for how the CEO thinks. On the other hand, you can be seduced by their ability to present themselves in a way that doesn't really impact how they run the business. And if a management team is doing too many interviews or podcast interviews, it's also not a great sign of their focus. So, grain of salt there. The next thing we want to see is how much of the business does the management team own? All things equal, the more shares that a CEO or a management team owns, the better, because then they're aligned with us as shareholders. If shares go higher, they do well, we do well. If they have a certain amount of shares, they control the company. And then at that point, it can be a double-edged sword the other way, where they can't be ousted. Mark Zuckerberg at Meta Platforms is an example of this. The last thing you can do with management is to look at how their past statements have lined up with the results. Go to old investor presentations and see what the strategy was, and then look a couple years beyond that and see how the results lined up to that strategy. You can do this on a yearly basis. At the beginning of the year, they will usually give guidance for what the expected revenue and earnings will be for the year ahead. See how they meet their guidance targets on a year-to-year basis. A management team that meets their targets or that tends to beat their targets and that underpromises and overdelivers, that's a management team that you can take seriously. There's a school of stock analysis called technical analysis. It's primarily based on studying the charts of stocks, their price movement, and from the patterns therein, predicting where the stock will go in the future, making buy or sell calls based on series of patterns. There are people I respect who get value out of technical analysis. I have never gotten any real value out of it. It's just not something that has made solid sense to me. Nothing I would be willing to put money into. Let's put it that way. So why am I taking this time to tell us to look at the charts? It's not to study the patterns and try to predict where a stock is going to go, but to see what has happened to the stock in the past so that we can know where we might want to investigate further issues. Let me give some examples. We'll start with an easy one. PNC, major bank in the US, 5-year chart, we see 2 major sell-offs, 2 major drops in their chart. One is in March 2020, one is in March 2023. March 2020 is Self-explanatory at this point. It's the onset of the COVID pandemic. March 2023 is when we have the banking crisis in the US, where a couple banks go under and people start to realize that higher interest rates mean banks have to spend more on interest for the deposits they have. This gives us a window in. This has caused PNC's shares to go lower. Is it merited? How is PNC's business affected by this? That's the sort of thing we can do here. Take another example. Levi Strauss, the jean maker. If we just look at the last year, we see two major sell-offs again for Levi Strauss. I know, because this is why I picked them, that the most recent one is from their latest earnings report. I would guess that the other sell-off, without having done any further research, is also an earnings report. But that's something for us to look into. We go to the headlines, we go to their press releases, we try to understand what happened that triggered that sell-off, and what does this mean for the business? Was it overdone? Do they have any hope for the future? And so on. These are the sorts of things that you want to understand about Levi Strauss if you came across it on a screen or whatever else before you go any further. Let's use one more example, a positive one. Broadcom. Broadcom is one of the biggest semiconductors makers in the world. If we look at their one-year chart, we see a big spike upwards in May. What's interesting in this case is that's mostly triggered by another company's earnings report, NVIDIA's, which set off a lot of excitement over the spending needed to support the new AI technologies that have become popular. How will this play out for Broadcom? How much will their business benefit from AI in the coming years? Again, this is an important issue to figure out if you're holding shares, because you just got a bump. Was it merited? Do you deserve that big jump from the 600s to the 800s? The point of these charts is not to read the tea leaves and try to guess where the stock is going. It's to understand what news or fundamental events have caused the stock to move in the past. In the short term, stocks may move randomly or even in the wrong direction on a day-to-day, week-to-week basis. But big jumps are usually caused by something. And if you understand what the causes are that move a stock in any given direction, you'll be better prepared for buying or owning shares if you think it makes sense. I remember seeing the word scuttlebutt for the first time in the late 90s or the early 2000s on message boards for wrestling or something like that. It gave me a chuckle at the time, Scuttlebutt is a term for gossip or buzz. It comes from the naval world. Finding out the buzz about a company you're thinking about investing in can be really valuable. It gives you a different angle from what you see in the financials or what the company is willing to tell you. If you get a fuller picture, it'll help you understand what the blind spots are. The first place to think about this is looking at financial websites. See what investors are saying about this company. What concerns do they have? What are the bullish arguments? What are the bearish arguments? This can be a little bit of tail wagging the dog since investors are focused on the stock and not the company itself, but it can be interesting. From there, you can go to a place like LinkedIn. On LinkedIn, you'll see how much the company is hiring, which can be really valuable to see, but you'll also get a sense of what tone they're trying to strike, what things they're trying to talk about as a company with an eye towards employees. From there, you can jump to message boards or to Reddit or wherever else where you can find how people are talking about the company anonymously, how people are talking about them where nobody's really looking that closely. And from there, you can go to a site like Glassdoor, which is more well-known, and again is an anonymous site for employees, former employees, people who've interviewed with the company to talk about the company. You get a vote on management. You'll see the CEO's rating from their employees, but also you get a sense of the culture, you get a sense of what the concerns are. It's again a bit of a grain of salt because it'll have its own bias, but it can be a useful piece of the puzzle. From there, local news sites or trade publications can be really helpful. They give you a sense of how the community is viewed how the company is viewed in its community and how the company is viewed in its industry, as well as what the concerns are of a given community or a given industry. There is one stat that also reflects the scuttlebutt a little bit. It's called the short interest. Short interest, no relation to us, is the percentage of shares outstanding that are sold short. Selling short is betting against a company, betting against a stock. You borrow the shares and then you sell them before you've actually bought them, and then you'll have to buy them back later. If the short interest percentage is high, this is a bad sign. It means there's a lot of smart money out there who's betting against the stock, whether because the company has problems, whether because the stock is overvalued, or something else. At the same time, this can be volatile. If that group of people gets it wrong, the stock can take off. All things equal, I would probably avoid high short interest situations from either side, long or short. We're focused on buying stocks on Short Investing Guide, but I would generally avoid those situations. That said, if you have a differentiated insight and you have a real reason to think that a company is in a good position or in an improving position and you see a high short interest, that's something that you should pay attention to as potentially a positive sign that you have an edge. The learning never stops when you own shares in a company. You always want to follow the latest news, and you always want to seek out more information, whether to support your arguments or especially whether to disprove your arguments, to shape the foundation of your thesis and see whether it still holds up. But there comes a point, especially before you buy shares, where you reach a limit. You can't pull in every piece of information that's out there. First of all, because you literally may not be able to find every piece of information that's valuable, but also because at some point you need to parse through it. There are only certain bits of information that will really matter to investors and that will really move the stock. So you have to reach that limit, and then it's not useful time spent. These three areas, management, price action, and big news events, and then the scuttlebutt, might end up turning up nothing for you. They might not have anything new to say. I do think, though, that they're reasonable things for you to keep on your radar as things to look through, as ways to flesh out the full picture and really understand what you're getting into when you buy shares of a company. If you look at these different things, you might end up finding that one piece of information that really changes how you think about the company, whether to buy or to not. That's all I'm going to do for now for evaluating stocks. The next couple videos are going to be where you can find all of this information. I just ran through a bunch of sites for Scuttlebutt, but where can we get all the information we need to make a full decision about a company? That's what I'm going to talk about next. Subscribe to this channel to get those videos when they come out. We're doing one a week right now. Stay tuned for more. Check out shortinvestingguide.com. Thank you for watching, and have a great rest of your day. See you soon.